Hello and welcome to this post-budget special right here on Leaders of Tomorrow, breaking down the announcement from the finance minister across different industries and sectors. Three experts from the world of personal finance joining us here on the show to tell us what they thought of the budget and how they would rate the budget. Let me welcome in our guests. First up, I want to welcome Ajay Thakur, Head SMEs and Startups at BSE. Feroze Azeez, Deputy CEO, AnandRathi Private Wealth. Hardika Shah, Founder and CEO, Kinara Capital. Thank you to the three of you for taking the time to join us here on Budget Edition on Leaders of Tomorrow. I want to start by talking about the big headline from the finance minister, and that's as far as the fiscal deficit is concerned. Open to the three of you, but Mr. Thakur, if you would want to take it first, to talk about the finance minister saying 9.5% for this year, pretty much in line with what most estimates were being put out in the markets. Next year, 6.8% is what we are looking at. Are you confident these figures will be achieved, particularly given that we're coming off the tail end of the pandemic?
I'm extremely happy the way the government able to manage the fiscal deficit at 9.9%. Nobody has expected 3 to 4 months back, but as the economy started getting unlocked and as the businesses start reaching to their old level, we have seen, the GST data, and it was evident from all those figures which were coming very healthy. We were crossing 1 lakh crore GST collection. The government has managed it very well. The government and RBI both have infused a lot of funds into the system to ensure that there should be sufficient liquidity and it should be given to the industries on time. Besides that, let me tell you one very good thing that has happened with our country is that our service sector and our IT sector, they have done, and because of this, I am happy that we have been able to maintain the fiscal deficit to this 9.8% and going forward to 6.8%. Government has managed it very well, and give thumbs up to the government on achieving such a great target.
Hardika?
I think that this budget is really addressed the need of the hour. It has demonstrated that even though with this fiscal deficit, even though there's a slightly higher deficit, it is good because we are talking about that V-shaped recovery curve. And frankly, I agree that probably 4 or 5 months ago, I don't think we could have visualized that, but this government has certainly delivered that today.
How about you, Feroze?
Sunanda, I think I'm very happy looking at the targets. They are generous targets, they're larger targets. I think there is a key message that spending will not be compromised, capital expenditure will not be compromised. We have had different regimes where we have been very restrictive in terms of expenditure. This one is very clear messaging that we are not wanting to cut our expenditure, but rather push the economy and continue the revival which we have seen, which are early signs, and to sustain that over the next year and a half. This was very, very important a number. But I think there is a collateral damage or benefit to different asset classes. I think debt will have some damage, especially because of the higher government borrowing which will be needed, because tax increases has not been the mantra to create spending, but higher printing, higher liquidity is what I think is the mantra. But I think I'm very excited looking at this kind of expenditure pattern resulting in a larger fiscal deficit, which is okay, and that can be controlled in subsequent years rather than today at the cost of economic revival. We should not be very tight with respect to expenditure.
So that's definitely positive news and optimism on the part of the three of you on the macroeconomy. Another thing on the macroeconomy I do want to discuss is inflationary concerns, given especially the cess being announced. on petrol and diesel. Good news that there was no cess on COVID, as a lot of people were expecting there would be, to aid sectors and businesses that needed it. But do you think that this announcement on petrol and diesel could perhaps lead to an inflationary trend over the course of the year? Open to the three of you. Hardika, to you first, though.
I'm sure there will be some challenges, but I think that we have to take a broader, larger picture. The inflation challenge to me is going to be hopefully a short-term challenge, right? And we need to take this in the context of what we're trying to build out, and frankly, get back on that road of recovery, even at a short-term cost on inflation. But it is very important. One thing that we need to get the supply chain to stay functional, right? So while we do this, and from an inflationary challenge point of view, if the supply chain remains operational, functional, and moving forward, it should offer the right balance.
Feroze?
So I don't think so. Inflation is no more a demand side kind of problem. I think it's been the supply side problem. I think this result in any inflation, substantive inflation movement upwards, especially food inflation. Second, I think the agri cess is also on the indirect tax side, which is on the GST side, and the fine print very clearly says it's going to be on very few items, and the impact is not going to be passed on to consumer. That has been taken care of, is what the bill in finer print says. So I don't see that as a big concern, because inflation will be moved by several other variables than this.
Mr. Thakur, what would you have to say?
Yeah, Sunanda, 3 months back, we have seen the inflation moving beyond 7%, and it was a matter of concern. But it was more because, of the disruptions in the supply chain. But as far as your question is concerned regarding the cess, and finance minister has that they have reduced the others that are being imposed on these products, and cess has been increased. So overall impact on the price will not be that much, which give rise to the inflation. So I think it has been properly managed in such a way that cess don't have any impact on the price of these products.
Okay, from that macroeconomic picture, I want to do a bit of a deep dive into different sectors. First up, textile. A huge employment generator when it comes to small businesses. The FM announcing the setting up of textile parks. Again, to the three of you, Mr. Thakur, if you want to take this first, are you excited by the announcement being made by the finance minister? Do you think this is going to go a long way towards creating that kind of capacity that small businesses are hoping to see?
As far as textile park is concerned, I think it has been a very big announcement. Government has said that they are going to set up 7 textile parks over 5 years. I think it's a great development. India has been a textile hub. If you see Ludhiana, Surat, Coimbatore, these are big textile hubs in India. And there was a need to have such textile hubs so as to reduce the production cost. If the cost of the productivity will be reduced, then our product will be more competitive in the international market. So there has been a loss as far as export is concerned, and to increase the export, to make our products more competitive, I think the government has thought of setting up this textile park. So I think it's a right decision in the right direction, and I'm quite sure that this will give a lot of push to our textile sector.
Hardika?
Look, I agree. Look, what is it? 10-12% of the country's export comes from textile. This is a big sector for us, a sector that that lost some of the tax benefits when GST was implemented. And so when we look at the micro enterprises that operate in the textile industry, which is a very distributed industry, getting some level of consolidation, getting this platform for textiles to operate from going forward is the right next step to make sure that textiles remain a big part of the GDP as we build out the whole industry.
I'm going to take a quick break on that note. We are back in just a moment, though. Welcome back with us here on Leaders of Tomorrow. Tonight, we are continuing our post budget analysis right here on Leaders of Tomorrow. Sector specific, but something that all businesses were hoping to see some sort of commentary on, and that's as far as the liquidity situation is concerned. 2020, of course, not being great for liquidity, particularly for small businesses. The finance minister talking about the ARC, the Asset Reconstruction Company, for NPAs. Feroze, maybe you could take that on first. The implementation of that's something that's going to be watched closely. What are you hoping to hear from the finance minister as far as the implementation? What's your commentary in terms of whether NPAs and the liquidity situation for small businesses will definitely ease up?
See, it's a very big positive because what has happened is over the last few years, a lot of provision has been done, especially by the PSBs, public sector banks. I think trying to monetize that and creating a market for those bad loans will make sure that there will be some write backs into the PNLs and in turn the balance sheets of these banks. So it's a very good news. How does it impact you and me is because most mutual funds have the largest exposure to the banking sector. That implies that if the banking sector does well, the outperformance of the mutual funds over Nifty goes up. So that's the direct benefit.
Mr. Thakur?
I think it was a demand. It was a suggestion for quite long time that ARC should be formed, development institutions should be formed, because over the years we have seen more of the commercial institution than development institution. And there was a need to have enough development institution in the country to have a good infrastructure, good businesses going, and even the corporates should get finance at right point of time. The another worry was the growing NPA, and in this corona period, there was there was an apprehension that going forward the NPA may go up to 14%. So there was a need to have development bank and ARC here, where the bad loans can be shifted and the books of the banks can be cleaned, so that banks can move forward and give loans to the institutions, and the bad loans should be taken care by the ARC. So I think it's a very right move. The backbone of any economy is its financial institution, and more trust has been given to these financial institutions, banking, etc., so that finance can be provided to MSME sector or even the large corporates, so that they keep on thriving.
Hardika, what would you have to say?
Has been long in the asking, and what it does do is that if PSBs are able to hand off to the ARC, then the limits they have internally set for lending to NBFCs who lend to MSMEs or lending directly to MSMEs, it opens up. And so ultimately, hopefully, there will be a trickle out of capital and some level of liquidity that goes out with the ARC in place.
Okay, let me also talk quickly about corporate bonds, Mr. Thakur. Are you happy with what you've heard so far?
Yeah, I'm quite happy because if you see the worldwide bond market is more active, and that gives a leeway to the corporates to issue more and more bonds and raise funds. Okay, I think in India till now we don't see a vibrant bond market, and therefore the need of the hour is that there should be a vibrant bond market, so that it can be actively traded and corporates can easily access the capital market to raise funds by issuing bonds. So the thrust was needed, and I think the finance minister has put a right thrust on it in the budget, and I'm quite sure that will help the market.
Hardika?
I was going to say the challenge is always in the bond market in India has always been around a lack of an institutional framework. There hasn't been a distinctly separate set of governing structures that help that liquidity. So that we will do something about it. Hopefully a permanent institutional framework gets put together, and that can then buy investment grade securities, both in stress times or good times, and then it allows for liquidity to be then a permanent part of the of the infrastructure that we're trying to build out.
The FM also talking about The divestment targets, again, or to the three of you, Mr. Thakur, if you want to take this on first, 6.8% for next fiscal. Some part of that, of course, will be achieved by the kind of divestment that we could see in 2021. But given past divestment efforts, are you confident that this figure and this announcement by the finance minister will be met?
I will not like to speculate on all those things, but as finance minister has said, and I will like to take it on the face value, that yes, divestment is on the agenda, and one hint that they have given is that they are going for LIC IPO. So I'm quite sure that the divestment target will be there on their mind, because in the next financial year they have also to reduce the fiscal deficit to 6.8%, and some part of it will be met by the divestment process. So if the capital market is going to be buoyant, I am quite sure that they will aggressively go for divestment and try to raise more and more funds.
I do want to also talk about the fact that the finance minister has announced FDI in insurance to 74% from 49%. Open to the three of you. Hardika, if you want to go first, more so from the point of view of rebuilding confidence when it comes to the international community that's looking at the domestic markets. Would you say this is a good move on the part of the finance minister?
Yeah, I think so. I think that when you see, large organizations that are part of the culture and history of a country coming into this kind of a refinance and a whole new opening up, I do think that foreign investors start to re-energize around the great success story of India. And so I do feel that this will help.
Mr. Thakur?
As far as insurance sector is concerned, it was never discussed about divestment. On insurance sector, always deliberation and discussion was on foreign direct investment.
Right.
And always, there was a demand that it should be increased from 49% to 74%. I think finance minister has gone better, and that's why she has increased that limit from 49 to 74%, and which is a right move. I think more and more foreign direct investment will come into the insurance sector, which will professionalize it and bring momentum in the country, because I think insurance is still very less penetrated in our country, and it has to be taken to the next level.
Open to the three of you as we're running out of time on this panel, but I do want to talk about the residential status threshold for one-person companies being amended by the finance minister. That's on one hand. The second was also the changed definition of small businesses to 2 crores from 50 lakhs on the back of announcements that we heard late last year in terms of redefining really SMEs and MSMEs. Good move, would you say? And what sort of signal really is this going to send out when it comes to ease of doing business? Hardika, if you want to take this on first.
Absolutely, absolutely. Look, 90 to 95% of small businesses make less than 1.5 crores of turnover annually. So we are really talking about micro enterprises here. By taking that to 2 lakhs, we are reclassifying the micro enterprise segment that is an important element of what priority sector lending goes to. That's an important element of how we treat them, what kind of compliance is required for them, and what kind of and the ability to move them up into that move the bar for them to get access to so many of the schemes, including the production link schemes. The other thing about the one-person company, that's bringing a level of formalization, right? So it's a level of formalization that allows individuals to be considered micro enterprises and then get access to the programs that the government is thinking of. Both those moves are excellent moves and very timely.
Yeah, I also agree with it. More than that, government focus has been always on ease of doing business, and most of the people are not converting themselves into company or entering into the formal sector because of the fear of compliances. So government wants to, really implement or tell the people or convey this message that yes, we are really focusing on ease of doing business. So I think because of that, they have increased the threshold limit to 2 crores. Okay, second thing, what the government has said, that up to 10 crores of business, there is no requirement of tax audit. Again, it's a very great move, and I think it will give a lot of comfort level to macro and small businesses. And this is, let me remind you, this is in addition to the revision in the definition of MSMEs that the government has done in the month of August. So it is in addition to that. So I think government is considering MSME sector to be very important. They understand that it's the backbone of the economy, and that's why there is a lot of thirst on ease of doing business.
Feroze, I do want to talk about the tax holiday being extended by 1 year for startups. There was no, fine print as far as say work from home is concerned for the startup industry. Something they were hoping to see. Nonetheless, do you think this is a good move that's been announced by the finance minister?
See, I think startups have gone through their share of pain. Of course, this is some relief, but this is just a painkiller. Doesn't structurally address the problems today which startups face in the post-COVID world. So I would be marginally happy, but I think for a startup and an entrepreneurial culture to flourish in the country, for a budget like this, there should have been more attention, especially given the hardships which are a collateral damage of the pandemic. I don't think have been addressed adequately enough. Of course, the fine print might have more, but I think the first glance says there's nothing much.
Let me end tonight's panel by asking the three of you to rate the budget. Feroze, to you first, on a scale of 1 to 10, how would you rate the budget?
I think if we give equal weightage to personal finance and the economy, I would rate it 8 on 10.
Hardika?
I'd give it an 8 out of 10, largely because of the small business classification, the focus on the textile parks, and just really meeting the need of the hour. I do think that the budget fell slightly short on figuring out how to provide liquidity support and increase the liquidity in the market.
Mr. Thakur?
I will rate it 9. I think the government has put a lot of focus on the infrastructure, health sector, MSME, startup. I think they have tried to cover almost all aspects, and that also tried to understand in such a COVID era, once in a century, these things are happening. So with so much constraint, I think government has delivered a lot in terms of budget. And first time I'm seeing expansionary budget coming, where a lot of focus is on capex also. So I think these things are going to create a lot of employment and take India to $5 trillion economy faster than expected.
We've run completely out of time on this episode. Thank you so much though for your time with us here today.